Should investors be focusing on the vaccine news, which is a kind of second half of next year's story, or should investors be focusing on the virus news, which is a here and now story and seems to be getting grimmer by the moment?
I think the market already taking a decision to look beyond this. They're looking through the actual vaccine. I think it's by the market's premise, it's given that we have it somewhere in the next 6 months, Guy. And I think the market already starts to price assets that way. The only thing we are really missing from the final piece, of course, is to see the full fiscal support that we expect out of the Biden new administration. But that combined will leave, 10-year at 1%, 110 basis points as a critical inflection point for the rotation and a confirmation of the rotation. But certainly, when we look at our equity portfolio, what is really working right now is, as you said in the intro, it's mining, it's dry bulk shipping, it's the soft agriculture, it's the industrial metals, it's the sort of optionality of buying leisure hotels and that like. So I think the market increasingly is playing this game and awaiting sort of the resolution of what goes on in the U.S.
So I guess my question is, how long does the economic data have until it has to back up what the markets already think they know?
A lot of time, because you have to remember the policy response at all times will be more of the same. So I think the early game in 2021 is what I used to call pretend and extend, but this time it has to be pretend and extend to infinity, because we already know that Powell is concerned, the ECB is concerned, Lagarde makes about 2 to 3 speeches a day trying to convey on everybody how important it is to get the fiscal push. So it's ironic. We have no price discovery in the marketplace. It doesn't really matter, to be honest, when the vaccine comes, as long as it comes.
Is this going to be inflationary? And if so, by how much? US break-evens, 10-year break-evens, have bounced back to where they were basically at the beginning of the year. We're off a little bit. 1.8 at the beginning of the year. We're at 1.71 now. Is that a reasonable rate of inflation to price in? And do you think that there is the possibility that that goes higher?
I think it's too conservative, and let me sort of phrase why I think that is. Since '98, which I think is timeline 0 in this world of non-price discovery when Greenspan decided to bail out the LTCM, since then we've been on a financial stability policy. Everything in the world has been about financial stability. The way that works through society and economics is simply the trickle-down effect, the champagne glasses flowing over. So it's benefiting the rich, it's benefiting the haves, and it's benefiting certainly capital ownership. What the pandemic has done and what the pandemic has accelerated is a couple of trends, but most importantly, it's put focus and the omen on policy response to be on social stability. And when we think in terms of social stability, we have to remember that is inequality, which is one thing, it's infrastructure, which is another, and certainly it is the green transformation. What is embedded in all of those 3 subcategories of social stability is a much, much higher spend from both the government and consumers, because of course, if you do a redistribution policy through one of the 3 things I just mentioned, then you're increasing the propensity to spend money in the economy, Guy. And I think that is going to be the surprise in 21, plus the fact that I think China is coming online very, very soon. I think the bond market having a little bit of a failure in China right now will mean that they will step up probably a little bit sooner than I expected, which used to be Q2. Now I think it's going to be Q1. They have most restrictive policy. I think all of this is coming in place as we also play the vaccine card, and we finally, hopefully, one day can end the saga on the president-elect or not going into office pretty soon.
One more question on this part. We'll delve into Europe more specifically on the U.S. economy in the next segment. But so how do you hedge this? Typically, if you're going to do safe haven, that's usually what, gold? It's usually go to the 10-year. What is going to be your hedge in case a scenario that you see doesn't play out?
I think commodity, and I think we just started the biggest commodity cycle in the last decade, and I think that will play out in 21. So I think the place to be for investors in the commodity cycle, and of course, which we need to address, even old people like Guy and me. I'll take us, two of us only in that segment, but we need to focus on the fact that crypto has become a real valid sort of alternative for safekeeping. I think Druckenmiller has called it the West Coast money. You have the millennials, you have the Generation C. These people want to live in a different system to what we do, and that is the fiat system. They are being made redundant through the fiat money system. They trust something else. I think that is a growing inclusion that we'll see. We've seen a number of treasury in companies over the last few months and weeks getting into this space. So I also think that will have a competition, and I think it's an increasingly, we're going to see more and more people like my age group getting involved with that part of, as a safe haven as well.